Hi everybody, it's Rowan Smith with the Mortgage Center. I want to address buying foreclosures today and why they present a challenge if you don't have a lot of cash, i.e. a big down payment, and when you're trying to buy with less than 20% down. When we brokers send an approval up and we look and try to find out how much you're qualified for, we do so, and assuming you're putting less than 20% down, we have to send it to CMHC. And the catch to this is we need to know the purchase price. So if you find a foreclosure it's listed for $400,000, you go and take a look at it and it looks like a fantastic deal. And let's say you're going to put 10% down, so $40,000. We get you pre-approved for $360,000, but in a foreclosure you have to be able to go into court on the date that all offers are presented, because it is a public auction, and you have to be able to present a subject-free offer, free of any conditions. So you can't say subject to financing, subject to a building inspection. No, it's an as-is, where-is basis. Now why this is important is, imagine you're trying to buy a place, but you can't get access to the property. After all, the bank's foreclosing on the seller. Do you think that the person who's being kicked out of their home is going to allow convenient access times, going to allow people onto their property? Usually no. So you have to be able to get it approved, often without an appraisal. Now everybody's in the same boat here. The only people that aren't are pure cash buyers. Guys that are just going to write a check, or guys that are going to get private financing for maybe 50% or less of the value of the property. So we had some clients come to us recently trying to get hold of something. It was a fantastic deal. The problem is the guy wouldn't give access. And they said, well, we want to go in at this price, but we need to be pre-approved up to this price plus maybe 100 grand because the bidding could go up there. We're going to put 5% down. Now the problem with this is we have to send a number to CMHC, and CMHC looks at it and goes, okay, you're putting an offer of $400,000 in. They do their own investigation or internal appraisal to determine the value of the property. If the property value is there, you're approved, assuming you qualify on an income basis. Now if you subsequently go to court and the bidding comes in $425, $450, $475, and you offer $470, $485 to get the property, and you win the auction, now you go back to CMHC, and CMHC is going to say, what happened to the property value? We had it approved at $400,000, we thought that was a fair price, you're paying $485. In that case, one of two things has to happen. A, you have to convince them, usually by way of an appraisal, which may not be available, that that property is worth $485, or alternatively, you've got to pay the extra 85 grand out of your pocket, not mortgaged. So if you're thinking of buying a foreclosure, you think it looks like a great deal, we need to sit down and go over your financial situation, down payment amount, income amounts, and determine what can you get approved for and what will this property be approved for. For the Mortgage Center, I'm Rowan Smith.